Hello, everyone, and welcome to another Genius Wednesday brought to you by the Coin Genius team. And it is Wednesday, May 6th. Lots of things happening in the market, but mostly we're starting to see, the solitary start to take its toll here. So we're going to be doing our agenda as the normal market analysis, and then we're going to start talking a little bit about the halving that's coming up this month and what that might mean to the price of Bitcoin and the price of cryptocurrencies in general. And we'll talk a bit around this COVID impact to, our social structures, how it's impacting your life, and how we can create new technologies in this new world of digital interaction. So with that, I will turn it over to our head of market research, Mr. Steve Quan, for our weekly market analysis.
Good afternoon, good morning. How's everybody doing out there? I know it's definitely a unique time, a little bit too much indoors for myself, but maybe it's just me, but I'm here to share a couple of the normal charts that I do. So here you go. Now, if everyone can see this, oops, sorry. Kristina, how do I hide this panel so I can actually move oh, I got it. All right, well, let's start with, here is the NASDAQ this past week. As you can see, it's at pretty much week highs. Let's move on. Oh, sorry, 1 second. And moving on, here is good old crude oil, the CL contract. Again, moving somewhat in tandem with the NASDAQ. And notice this week it's $23. That's because it's the June contract we're looking at. Next up is RBOB, also known as gasoline. And again, we are at multi-week highs. Gold, not as exciting, but here we go, kind of the middle of the range. Silver, again, middle of the range, but if I went out a little longer on this, you'd see that silver's underperformance is, well, that's an understatement to say the least. Oh, since this is a cryptocurrency podcast, let's take a look at this thing called BTC. Just a string of numbers that have 21 million of them. So that is approaching 9,300. I printed this out a little bit ago, so we can see that's a week high, multi-week high, multi-month high. Moving on, let's look at Ethereum price in Bitcoin. As you can see, this chart is quite a different chart than Bitcoin. So many of us if some may just look at Coinbase and see, oh, Ethereum's up, Litecoin's up, Satoshi Vision's up. But it's, as I've said many times in cryptocurrency, it's not just about what it is. It's a fact of how did you get there. And again, I'll say it, the great majority of cryptocurrencies and blockchain projects have lost ground or have lost value versus Bitcoin, i.e. Bitcoin dominance has increased. And once again, here's Bitcoin versus USD, and here's Ethereum versus Bitcoin. We can see a sharp drop of nearly 10% in the past week. How'd Litecoin do? Another top project. Well, that's lost almost 10% versus Bitcoin as well. And I guess my final question, which Kristina alluded to, has really nothing to do with blockchain, crude oil, S&P, but it's what are you doing during this shelter-in-place time to deal with all of the quote-unquote extra time? And it's kind of a rhetorical question. I'll let Jeremy and Kristina and everyone else kind of answer, and have anyone that wants to answer, because here at Coin Genius, it is about data and cryptocurrency and others, but we're all human too. And I know myself, it's been somewhat trying, to say the least, although I may normally be in front of a screen and I may normally talk to a lot of people on Messenger. It's those few hours a day where I might want to go to the gym or take my son to the park or do something outside where I'm no longer able to. I guess in a time like this, you really realize that those few hours a day where you normally like to do something in a public place or with a friend or family member, or even taking a dog to a dog park, when those things are cut off from you, kind of makes you realize, you know, there's bigger things than what Crew did or what Bitcoin did and so on and so forth. And on that note, I will stop the screen share and pass it back to Kristina.
Thank you, Steve. Well, I can tell you that in terms of having all this extra time, I'm not sure what you mean by extra time, but certainly trying to fill the hours. The short version is there is a bit of speculation with everyone's extra time here around the BTC price with the upcoming halving. I've heard in multiple trading groups where they're looking at, you know, why is it kind of testing this 9K barrier. I've heard folks say, you know, be prepared for a dip down to like the 8.2 ranges. There's definitely some debate happening like daily. And I know that Jeremy Bourne is involved in those conversations as well. So I will turn it over to the team here in terms of market analysis or COVID impacts, and definitely the BTC halving will be a monster topic today. Are you guys not able to unmute?
Jeremy, you're muted.
Correct. I was just seeing how good you guys were at reading lips, actually. It was a test. Jeremy Bourne, for those of you who don't know me, and like I said, this is a very interesting time in crypto at this moment, obviously coming up to the halving. I had made a statement, I don't know, maybe 2 to 3 months ago, maybe on one of these Genius Wednesday calls. And it was along the lines of, if I was a whale, what would I do? And if I was a whale, I would get people's hopes and dreams up to assume that the price is going to be a self-fulfilling prophecy and it was indeed going to pump to extremely high levels. And then I would completely dump it on everybody else and crush their dreams. I still hold to that. I think that's exactly what's happening. I think the price is reflective of the hype, and you're seeing that move up today. But I think similar to the last 2 halvings, we'll see the exact same thing, which is a dump right after the halving. So that's my assumption. That's my take, not financial advice. However, I just look at the numbers and try to make reasonable assumptions in terms of what I think can happen. Now, the only X factor really is the fact that we've never had a halving that coincided with a global economic downturn and COVID-19. So that's the X factor that is something that you have to inject into the equation in terms of how you're analyzing the market. And I can't really tell you how it's going to play out, especially with the injection of capital. You know, there's another $3 trillion that got injected in the U.S. economy as well. So, you know, very quickly, you know, we're exceeding, I think, $10 trillion in terms of how much has been injected into the economy, which, you know, obviously a lot of people are speculating that the price of Bitcoin, the only reason it's rising is because the value of the dollar is falling. And if the value of the dollar falls tremendously, then inherently the price of Bitcoin can rise in terms of BTC versus USD in that trading pair. So I could be completely wrong because of that X factor of the devaluation of the dollar, which then increases the price of Bitcoin artificially. So it's interesting times because anything can really happen. And, you know, I might be right, I might be wrong. But at the end of the day, I still do believe in things like the stock to flow model. And I think ultimately the price will increase. It's just, you know, just like any other halving, it just takes time. It takes time for it to rebound. And ultimately it does go up in value. I think the average is, I think the all-time high, it took 580 days since the last halving for it to hit the all-time high. So, you know, we're talking over a year. But at the end of the day, if you're a believer in Bitcoin and you're a hodler, then that shouldn't really be a problem because you realize that this was literally built to increase in value over time as more people adopt it. And if that holds true, then I would say it's a pretty sound diversification of your portfolio. And that's all I got.
Thanks, Jeremy.
Anybody else?
Morgan?
Yeah, I kind of concur with that. I mean,
comments.
If you guys can hear me. So I was talking to Kyle earlier, and we were talking about just portfolio management and a few things, and I think he's indicated that most likely there's going to be a big sell-off, largely from whales coming after the halvening. Halving, halvening, depends which way you like to say it. But I also think that what we should be looking at is what is the correlation in between that and the downturn drag that it's going to have on correlated pairs, specifically those that were built off of, Bitcoin or actually sort of flow with Bitcoin. I think there's also some interesting perspective that should be taken in terms of Ethereum. One of the things that I was looking at is that, you've got a lot of Ethereum in play, but you only have about 500,000 active wallets on a regular basis. And post-halvening, I think we need to be looking at a couple indicators that we haven't necessarily been looking at. One is where and how are we moving towards market adoption? And that's market adoption larger than traders really going into the mass markets. Two is what exactly is going to happen in terms of some of the altcoins and the altcoin perspectives inside of a large-scale economic downturn. A lot of what these coins should be looking at is what is your development plan? What is your engagement plan for getting other people on board? What are your API plans? And really, what are your use cases or utilization plans? You guys know I sit on the board of Pack Global. I actually just came on as their CIO. And one of the things that they're looking at is getting heavily involved in social good and social impact, which I think is pretty valuable. If you start looking at products like Digibyte, which has consistently been a decent performer, it has has a strong correlation to Bitcoin because it's forked off of Bitcoin. I think that's a good indicator to watch in terms of what some of the pairs are going to be doing with a happening and then a sell-off around Bitcoin. But then the other things that we've talked about over the course of the past couple of weeks, and I think that Steve Quan has alluded to, are the correlations in between the stock market and cryptocurrencies, specifically Bitcoin, as well as the correlations in between stocks and bonds. Stocks and bonds never used to standard economic theory is if one goes down, you buy the other. Now what we see is that they're moving in sort of concert with one another. So it's going to be a very interesting space, I think, inside of 2 weeks post-halvening. I think there's also a tremendous amount of opportunity that's going to come in to the market for speculators and, again, new entrants, because we will be looking at lower priced Bitcoin, which you haven't had in quite a period of time, outside of some of the hits that we've taken it below the 6,000 level. But, in terms of the broader American and global population that's looking at crypto, those are the folks that are coming in that over the course of the next 6 to 12 months, because the changes I think we're seeing in economic strength from the dollar to the euro to other currencies, the impacts that the US digital dollar is going to have towards the end of the year, and the impact that backed tokens are going to have towards Q3 of this year, are all going to have some sort of cascading impact on the markets that we're looking at daily.
I would agree. Mr. Morgan Steckler. Morgan, are you able to hear us?
Can you hear me now? Sorry about that. I think that we're in a pretty interesting time. I agree with everything that Oz has said, and Jeremy. With this unprecedented time with COVID and the world literally changing in front of our eyes, we're coming on this halving, or however you'd like to say it, next week. That's really going to put us into an uncharted territory. But this decoupling that we have to see with the stock market is one thing. I've seen unprecedented business with a lot of people who are really trying to balance portfolios with the conservative area of precious metals and cryptocurrency. I deal with a lot of retirement accounts, and I'm seeing quite significant moves of people who are trying to balance on both ends. More so in the silver than gold, because the ratio is 112.8 to 1 on the gold silver ratio, something that usually historically over the course of many centuries is 10 or 12 to 1. So a lot of people are seeing the supply that is completely dried up, especially on the gold market. You have a pullback today, but there's 6 to 8 week waiting periods right now for bullion made by governments. You know, we're talking Austrian Philharmonics, Maple Leafs, Gold Eagles. These are all shut down from COVID. So you're seeing gold tokens starting to move a little bit in cryptocurrency, but as long as people are hedging, at least in my humble opinion, that's what I'm seeing a lot of correlation in terms of people really trying to get out of this dollar. As was said, trillions are being minted, and no fiat currency in the history of money has ever survived. So being able to protect yourself is key. Having cash on hand is good for short term, but having gold and silver is one thing, and then the upside of crypto, it's, at least in my humble opinion, not financial advice, that's a pretty safe move with this major black swan that we're all living through.
Hey, Morgan, this is Steve Quan. I'd like to ask you a question. I think you and I touched on it a long time ago, but in the past few months, you know, I've had many questions. How can I buy crude oil at -37? How can I buy silver at $11.95? I told people you need to enter the futures market to do that, and just as quickly as it went to -37, as unfathomable as it sounds, it could go to -370. Silver futures could go to $1, where the actual, could you explain briefly to maybe some of the listeners on how the COMEX futures may be representative, but how the spreads between the actual and the futures work?
Yeah, good question. I could touch on that a little bit. You know, it's something in over the years that I'm always asked, and I kind of always allude that to ETFs and these contracts. I'm personally, I abhor ETFs. I am not a fan of them or any of these future contracts, because at the end of the day, you're just a pawn on a chessboard where it's controlled by the big players. They're contracts that are continuously and exponentially borrowed upon more contracts. So unless you're holding, 9 figures or above, there's nothing you can do on the board and the rules that are changed under your feet. Again, it's, you can go conspiracy, but at the end of the day, I'm always a solid believer of, not to avoid the question, but if one is getting into precious metals or crypto, own it yourself, own the physical metals, or have it in a depository, or some of these cryptocurrencies that have a gold backing or silver backing.
What
have something
happened,
that's
what
at least.
now?
Can you guys hear me?
Yeah, somebody's not on mute.
Oh, okay. I don't know what happened there. But I would definitely have the physical ownership. And, if one does that in an IRA, you can do geographical diversification, where you can have a master sub account with Brinks and have them in different countries. Sure. But have it physically stored somewhere that you can have access to, or it can be liquidated if you have it inside of a retirement account. That doesn't completely answer your question, but it's more of that I avoid anything to do with futures or ETFs, because have never been a fan of them, just because I am not a fan of things where rules and boards can be pulled out from under you.
No, Morgan, I think that does answer. And sorry, Kristina, I got to add my 2 cents. For the record, a long, long time ago in a galaxy far away, I was, along with the firm, the second largest holder of SLV, unbeknownst to many at that time, but it was not very popular and it was fairly easy to do. And I guess in my mind, SLV and SI give you silver exposure, but one should also just note it can give you many layers of margin, but when that goes awry, it can also go very negative very quickly. And the other note on deliveries, if someone asks, well, why is there a premium to spot? I'll explain to them in 1 minute or less. If you want to take delivery of a silver future, by all means, you can. Just put about $77,000 in an account, hold that future until expiration. You will get essentially a letter from your clearinghouse. They will take that $77,000 and you will have a little slip on your computer that says you can take delivery of this. Now it's on your onus to go to the COMEX, which is in New York, right across from JP Morgan's headquarters, and arrange someone to pick that up. There is no 5,000 ounce silver bar. They all weigh approximately 1,000 ounces, although only about 1% actually weigh 1,000 on the dot. And then you have to get that to someone to do something with. So hence why there's a premium. Kristina, I'll give it back to you, but I had to get my 2 cents in there.
I appreciate it. It's a tangled web for sure. I'd like to pick on Russ Wilcox next to just discuss indicators, data points. As all of this is moving, you know, I'm always interested in how do we build an intelligence engine to give us, you know, real-time data. And then after that, Dustin Minch, we're going to be picking on you to discuss the halving and the mining implications.
Awesome. Awesome. Well, thanks, Kristina. I think one of the things to start off is to highlight for all that for all those who hadn't believed Steve Quan for the past year or so, I can officially tell you he's right. We at Coin Genius have access to over 300 economic indicators going back to 1960 for all G20 countries. And we are in the trenches doing a very robust statistical analysis. And in doing so, Russ Wilcox validated that Steve Quan is right. So you can mark this at 2:30 EST on May 6th that Russ said Steve is right. I'm sure that's going to go on your wall, Steve. But in all seriousness, so what this is able, what this crisis allows us to do is fundamentally look at the contextual events that drive market systems. And so generally any type of an approach for economic forecasting or anomaly detection, event detection, black swan detection, you only had a little sliver of data, right? You maybe had, 10 years of total Bitcoin prices with probably the last 4 or so being viable data because that's when it became an actual economic commodity. That's not a lot of data in the big scheme of things. And so what individuals typically try to do is they try to add in more data. So correlating, add in assets that are correlated to Bitcoin or anti-correlated. And that's kind of where we started. And we started to notice, as you saw a couple of weeks ago, that the Bitcoin and VIX is highly correlated. You're noticing crude oil and Bitcoin being anti-correlated. So those are indicators that allow supplemental contextual information to help us within our analytics. So where we're at now is doing a deep dive, adding in this kind of contextual framework instead of saying, okay, let's just add more data in. Let's understand the uncertainties around these large-scale economic events and what roles these major indicators play. So for example, we have access to a whole bunch of stuff, including tourist data, home rate data, you name it, we probably have it. But one of the things that we're starting to try to do is look at kind of these major unemployment figures that give us a sliver of insight into what the economy is like at the foundational level, not the stock market level where you have the government pumping in trillions of dollars that I essentially believe is artificially inflating the market, that this thing is only going to last so long before you have reality kick in saying that supply chains are going down, there's not interest. I mean, this is total, definition of market inflation in my opinion. So what we're doing is we're going back to the basics and saying, okay, how are people feeling? We're about to launch a new sentiment engine that you can start seeing the sentiment going on live in regards to tweets about how people are feeling about Twitter, not Twitter, about Bitcoin or other prices, but then extending that and saying, okay, how is there a delay? Is there a lag between unemployment figures and the price of Bitcoin? What about GDP? What about, tourism index? What about the number of IP addresses that have changed over the last 10 years? All of this data we have access to, and we're starting to really dive down at a contextual level and ask the intelligent questions, essentially saying, what is currently driving the market at this point? Because all traditional models are off. They're gone. They're done. No one, whether you're in JP Morgan Chase, John Hancock, any of these guys who have some of the brightest quants in the world, their models are failing left and right because this is an entirely new market regime. So instead of saying, let's just try to force a square peg through a round hole, what we're doing at CoinGenius is looking at the fundamental dynamics of these data and creating robust inferences based on that.
Thank you, Russ. I'd like to give the team a quick opportunity to kind of respond to any of that or ask Russ any questions, and then we're going to move over to the mining category.
I just think looking at some of these data points that he's talking about is fascinating, and I think we can derive a lot of insights. And obviously the goal for us is to help the average person. Thank you to my wife, and I'm glad I work at home so you can hear her in the background. Yeah, it's just breaking it down in such a way to where the average person can understand what's happening, right? In 3 seconds or just a few seconds, you have somebody's attention as they come to a web page or a mobile app, and that's the goal. And that's the hardest part in crypto and any other industry. And the other industries like capital markets have had, a lot more years under their belt to refine this and get this to a place where it makes sense than crypto, which is basically just, a little over 10 years old. So it's on us to make really good, solid experiences so that the average person can understand and ascertain what's happening in real time. And I think sentiment is a really good place to start. So really excited to see what, Russ and his team are doing there so people can ascertain globally what the sentiment is across different asset classes, not even just Bitcoin. So pretty cool stuff. Thanks, Russ.
My pleasure.
Hey, Oz, I'd love to pick on you. You and we discuss a bit around, supply chains. I know you're like shopping in bulk right now for the fear of not being able to buy meat.
Mm-hmm.
Where are the data points that I can get that like in real time to see where it's breaking down so I can tie that into like bigger GDP inferences for 2020?
Well, I mean, the short answer is you're not. So there's a couple different global supply chain providers out there. One of the folks that, we use as a 3M vendor is working with them. But this is all proprietary information, which is challenging. I mean, I had done work with GE Fleet Capital about 20 years ago, and a lot of this stuff is considered secret sauce, including the fact what their aging reports are. Like, for example, with GE, we were reducing their turnaround time from selling vehicles from something like, I think it was about 90 to 180 days, just getting the vehicle back. Okay, so it comes off lease. How do you get it back? We got it down to about 3 days. But a lot of this is proprietary. And so when I tell you that 96% of your supply chains have been disrupted, I think you need to look at this as 4 factors. One, is it disrupted in terms of country of production, right? So that could be China, Malaysia, India, Vietnam, a variety of other countries. 2, is it disrupted in terms of country of assembly, right? So it could be pieces could be produced. They could be, other pieces could be assembled elsewhere. So for example, we had talked to Toyota. Toyota manufactures camshafts and a variety of other things in China, but a lot of, well, let's say a lot of your engines are assembled in part Japan, part Malaysia, part Indonesia, right? And then those things are shipped inside of the global supply chain. And then you have to consider where is there the finished product being put together, and that's largely the United States. And then you have to look at in terms of a series of disruptions around that, because what we're talking about is not just the disruptions to labor. What we're talking about is I apologize, I'm trying to close the 3M deal right now. But you have to look at like the challenges of what's going on at the end product stage. And in addition to the end product stage, you have to look at, everything from human capital to disruptions of access to transportation. And that's one of the biggest things that's happening right now. And I'll give you one last point. That 747 cargo that most people use to get stuff here used to cost $350,000. It's now $1.4 million.
An excellent point. Thank you, sir. All right, Mr. Dustin Mitch, let's get the 411 on mining and your predictions. I know you've got quite a few opinions.
Yes, I do. So no, not a whole lot. I think that, a lot of us miners are kind of sitting on the sidelines. Some of us that have some of the newer equipment, we're mining with it, right? But, for the average Joe at home miner, the profits have kind of been suffering for a while. And it's really kind of, the people that have the lowest electric rate are really the ones that are benefiting the most right now. But, I was reading some stuff earlier this week. It was kind of interesting. And they were saying that a lot of the almost 65% of Bitcoin's hash rate is made up from Chinese mining farms. 65% of the Bitcoin daily is being manufactured in China in these large mining pools. But what a lot of the data is saying, and I don't know how, true it is. I mean, it's based on statistics, but they're saying that a lot of these crypto mining farms are kind of over leveraged. I did not know that Bitmain was actually giving these large Chinese mining farms. Basically, they were fronting the equipment to them, giving them like loans on mining equipment. So, they have debt to pay off. They might have a 1 cent or a 2 cent electric rate, but as we get closer to the halving, if something doesn't happen with price, then these over leveraged mining farms could potentially have to give up all their Bitcoin every single day that they're mining because they're getting half of what they used to. And that's used to pay off these loans that they're basically getting from Bitmain for mining equipment. And what they're projecting is in the short term that 15% of the mining hash rate right now that's 15% is in North America, which I found to be kind of interesting. I figured that number would actually be lower than 15%, but what they're basically stating is that if these mining farms in China become over leveraged, they're going to have to start selling off a lot of their equipment, probably close down. And what they're suspecting is that a lot of that mining hash rate is actually going to come to the United States. And it's mainly because a lot of these mining farms that are being, brought online in the United States, they're attaching themselves to renewable energy sources. There's even some that, are being shipped out to the oil fields where, a lot of these natural gas pockets, they burn it off. I've been out in the oil fields. They just take a flare gun, they shoot it in the air and they burn this natural gas off. Well, they figured out that they could actually capture that, convert that into energy and mine Bitcoin with that. So that's like pretty much free electricity at that point, right?
Jeremy, that's almost exactly what we were talking with Green Tech about earlier.
Yeah.
It's interesting. So, I mean, there's this, in the renewable technology sector, there's so many advancements that are happening right now. So to your point, Dustin, and just getting on a call the other day, I mean, we're talking about, some really incredible advancements around geothermal energy storage, right?
Right.
These guys don't have crypto on their map at all, right? They're trying to save money for these large operations that are consuming a ton of electricity and trying to, basically give it back to them so they can take some of the cost off, reduce 20-30% of their costs overall for energy consumption. But I just posed the question to them, have you thought about mining? This is a multi-billion-dollar industry. There's a Chinese mining operation right now that's about to go IPO in the US or considering doing it. I mean, this is a big play, especially considering the fact that Bitcoin has shown its resilience. And I think people understand now that it's not going anywhere. So with that said, I think, there's a propensity to be able to invest in things like mining operations and hardware, especially with this new gen hardware where you can get, it used to be to where it was 2 cents a kilowatt hour would make a lot of sense with this old gen hardware, but you can literally be as competitive as somebody that's consuming 2 cents a kilowatt hour in terms of mining with new gen hardware at 7 cents. And you're basically operating on an even playing field, which is crazy. So to your point, that old gen, hardware after the mining and the difficulty adjustment comes through, they're probably going to have to capitulate just to cover their energy costs.
Right. Yeah. So
we talked about this, previously, and these new gen hardware are going to succeed.
Well, and it's the interesting thing about, cryptocurrency mining is for the last year, I mean, my biggest concern with Bitcoin mining, specifically to ASIC mining, is that it's extremely heavily centralized around these ASIC manufacturers. But in nature, I think that Bitcoin mining was meant to be decentralized. That was Satoshi's vision. He did not want this to be like a centralized network. And so I think what we're seeing is in the short term, like, yes, there is some centralization, manipulation going on in the mining space, but because it's designed to be decentralized, it's kind of, it's crazy how the market can kind of equal itself back out and kind of redistribute the hardware so that it makes it more of a decentralized network. Because I honestly think that in the future, 5-10 years from now, that maybe Bitcoin mining isn't such a heavily centralized thing. Like, I can see, like some kind of residential unit being made or something like that, where everybody can have a Bitcoin miner in their home and it be profitable for everybody, not just people with free electricity or, you know, next to free electricity. But, you know, so it's interesting too, to see some of these different renewable energy sectors coming out and adopt, you know, picking up Bitcoin mining. And I would suspect that, you know, based on some of the stuff that I'm seeing, I was surprised to see some of these large farms going online in North America. And so, you know, with this, like you were saying, some of this newer equipment that's coming out, it can compete with, you know, those cheap electric rates, just because it's, you know, 4 to 5 times more efficient than the older hardware. So, it'll be interesting to see how this shakes out with some of these Chinese operations going into the halving, because that has been a concern of mine with Bitcoin, is that, you know, most of the Chinese mining pools, they're getting the vast majority of the Bitcoin. Now, obviously they're having to sell that, so it's kind of being distributed throughout, you know, the network through exchanges and stuff like that. But I don't really see, you know, the benefit of having most of the Bitcoin being manufactured in China. We need to break this up and have some coming from North America, all around the globe, really. But it'll be interesting to see, you know, what effects happen to the hash rate. I would suspect that if we go into the halving and the price doesn't go up, we'll see a dramatic drop in the hash rate, because a lot of these mining farms that have the older equipment are probably going to unplug and have to get rid of that hardware. So,
Agreed.
in other news, though, in the GPU mining space, I got some work to do today, because Ravencoin, they just switched their algorithm over to a new, I can't even pronounce it. It's called Kapow or something like that. So I guess a raven goes caw, caw, caw. So it's called Kapow. But we're going to be doing some testing on that. And so I'm going to be keeping an eye on the hash rate, because, you know, there was speculation that, you know, the second that they switched their algorithm the last time, it took literally the FPGA miners 4 hours to crack the nut on that, and they were mining on that network too. So, you know, this could potentially be the turnaround point for GPU mining for Ravencoin, if we can keep those FPGA miners off the network and, you know, keep it strictly a GPU mining space. So, lots of interesting things going. I don't particularly know exactly when the mining profits are going to return, but I've talked to quite a few other miners, and based on all the statistics they're seeing, I think it's potentially going to be somewhere around September to October before we start really seeing the mining profits kick back in, you know, and see some sizable gains coming from that.
So Dustin, I have a very specific question, and this is kind of tied to the work that Russ is doing with our data points. So first off, the halving is right around the corner. I mean, I don't know where the data point is for the actual countdown, but I do know that when it happens, you'll be able to see it. I need all those data points because I want to be able to literally profile the current landscape, and then as soon as the halving happens, you know, as you mentioned, you start seeing, you know, some of the China folks go offline. When I see those things happen, that adds up to, you know, essentially our algorithm. The predictive probabilities get a lot stronger when you start seeing those indicators. So offline, could you help me with some of the data sources around that? Just in the next few days, even if it's a couple different websites that we're looking at. And then ultimately how I bring that into the system, because I agree, I think it's going to, you know, this discussion is always about, you know, trading and mining, and those things go hand in hand, right? And so this happening is a very big deal, not only on the price side, but also on the mining side, and it will change the behavior. When you start to change the behavior, you get into a Darwinian landscape, and I just kind of want to see what your thoughts are of what path do you think it will evolve in? Like, at what point do you think it grows legs and comes on shore?
Right. Yeah, I can dig up some information. We can kind of go over some of that stuff and see if we can, you know, get those data points that you need. Off the top of my head, I'll have to do some research on it, so I do apologize, but we'll get it figured out.
Awesome. Thank you so much.
Kristina?
Yes, sir.
Actually, you're going to be surprised at this comment, but Dustin, I got a little something to add on the mining tip.
Yeah.
I know you're going to think I'm crazy, right? Now, it was something that you just pointed out and Jeremy just pointed out. I do know a little bit about the energy sector, more than some, less than many. And yes, it's true in natty gas, when prices fall, they oftentimes literally do just burn it off versus flooding the market and essentially driving it to zero.
Yeah.
Now, if there were a way that something like the natty producers could actually get something for it, i.e. mining some cryptocurrency starting with B or maybe R or S or whatever, and get something for it without flooding the market, I think that is a whole new arm that, I'll be honest, I never thought of. And I don't think many have, obviously some, but that is a very intriguing point, and that's another shout out on why you gotta listen to, or you really should listen to, the Coin Genius mining expert Dustin Minch and the leader Jeremy Bourne talk about those ideas that are pretty cutting edge that sometimes get, blown over. But I thought that was one of the most intriguing ideas that I had not heard about, but totally makes sense.
Yeah, and like I said, I've been out in the oil fields where they don't have a separator that can separate they don't have like a proper separator, and they'll hit an unexpected natural gas pocket, and they'll literally just pump it into a pond and then stand about 600 feet back, shoot a flare gun, and just completely burn that whole thing off. Where it's like, I'm not talking some small pond, like it's not like one of the Great Lakes, but it's a sizable amount of natural gas that just goes to waste. And so I have seen some pitch decks. People have passed me some pitch decks of these boxes, like these big giant generators that will run on this natural gas, produce electricity, and then they can actually mine cryptocurrency on site. So, I mean, if they're, on top of that, what I think most people don't realize is that a lot of these energy sectors, certain times at night, they have extra energy that goes to waste. And so what they're doing now is figuring out a way to build these mining farms close to these substations where instead of just wasting that electricity, they can divert it to these mining operations and consume it that way too as well. So it'll be interesting. I think that, we're just now scratching the surface of that. But I think over the next, 2 to 3 years, there might even be some legit, investment opportunities where people can buy into these investment programs and participate in mining through some of these different platforms, kind of like cloud mining, but it'd be like a renewable energy sector of cloud mining, or, something, some kind of investment platform where you can invest in that company, and then they'll mine the Bitcoin, and you can potentially, reap some rewards that way too. So, it's definitely something I want to keep my eye on, but, it's been brought to my attention several times, and it definitely makes sense. It definitely adds up. So, I could definitely foresee some of this stuff coming, to fruition pretty soon. Jeremy, you look like you got something to say.
Yeah,
man.
I think,
I always have something to say.
Yeah,
go ahead.
For it.
One of the things, just building off that, the reasons why you're starting to see these farms being built around ASIC and a couple of these other companies, probably like Qualcomm and GraphCore, is one of the indicators that we're probably going to want to start taking a look at is the evolution away from GPUs or graphical processing units to TPUs, tensor processing units, which were specific processing units built by Google, I think in 2018, that are just starting to come to market, which within the AI and the data science space are starting to take a big hold of some of the models that we're starting to build because they're so computationally intensive. So I know specifically ASIC and GraphCore are starting to increase production of these TPUs or tensor processing units, and you're just starting to see the sprinkling of these into the mining space. But I think that's something to take a look at over the next 2 years as well.
Called what? TPUs?
Yep, tensor processing units.
Nice.
So they're more. So it's more or less like a GPU on steroids. So a GPU is your standard kind of NVIDIA graphics card or whatever. But these TPUs are tensor processing units, which are designed specifically to do very, very intensive matrix calculations isolated on that chip. And so that has a strong benefit for AI and data science because all of these are computationally intensive models to run, but it has a strong correlation to Bitcoin hashing and all of this type of stuff because now you're having a dedicated chip specifically geared for these high performance calculations.
Interesting. I'll definitely take a look at that. Jeremy, what was you going to say, buddy? He's gone now. He's gone. Now he's muted.
I'm just here and muted at the same time. So, no, it was just kind of going along with what you were talking about, which is, I've just been thinking, post 2008, some of the biggest companies in the world were born. You're talking about the Ubers, the Airbnbs, and they looked at and found a niche in that particular time and saying, if I can create a business with no inventory and basically be the middleman and facilitate a platform to where somebody else can utilize an underutilized space. I was trying to think of, we're in that same position now, and we're going to see a more severe economic downturn, in my opinion, which is very much in line with what Oz has been saying, and been trying to figure out, like, what is that next phase? Like, what is that opportunity above and beyond what we're doing here at Coin Genius or something tangential? And really what I come back to is something that you had just mentioned, which is underutilized assets, which are underutilized energy assets, right? So underutilized natural gas or geothermal power. I think that is going to be probably the biggest opportunity that there is, and anything that is waste. I have a friend that has a company that's thriving right now that makes tree-free toilet paper as well as paper towels. And initially they went after bamboo and thought that was the best way to go about it, but then they came across something called bagasse, which is basically an overgrown weed that farmers just want to get rid of. But it just so happens to turn out that you can make pretty good and soft and comfortable toilet paper and paper towels from that. And it's dirt cheap comparatively to bamboo. So I think that is where a huge opportunity lies, is finding waste, somebody else's exhaust that you can utilize to build products and services at a really cheap rate. And I think that's kind of the next evolution of where we're going to see the next unicorns come out of this particular economic downturn. So curious as to what everybody else thinks, or if anybody else is seeing that happen in real time.
Steve and Morgan, I'd love to pick on you. I certainly agree with that. I do think that those are where the innovations are going to come out of, is taking someone else's, garbage and being able to turn a profit with it. But Steve, what are your thoughts?
Well, I'm going to use a kind of cheesy quote, but I've been able to meet a lot of different people. And there was this guy named Curtis Jackson I met because a friend was filming something out in LA. Others may know him as 50 Cent. He was used to be a rapper, or is. And he had a cheesy saying, if it makes dollars, it makes sense, because of his name. And I know it sounds goofy, right? But it's just like Dustin mentioned, or Jeremy's mentioned, or any one of the people on here, those who are looking at what worked yesterday are kind of a step behind. Those who are looking at what may work now, as we've all said, I don't know anyone that's been in a lockdown for 45 or 90 or whatever amount of days it has been for you listening or you on here. So I think looking for new ideas within the realms of things that have worked are great, but looking at things that work now that may present new opportunities is a key. I've heard Sultan mention it. I've heard pretty much everyone on here in one way, shape, or form. And I know it sounds goofy, right? Jeremy mentioning somebody making something out of toilet paper. And I also remember 45 days ago, and I don't know if this was real or not, but somebody paying $1,000 for one roll of toilet paper on eBay. So I don't know the person that may have said, you know what, I think I can trade 9 rolls of toilet paper for a Bitcoin a year ago. You probably would have thrown me off this or thrown that person off. But in reality, it happens. So just looking for things that people find useful now and looking for underutilized things and combining those to make a profit for you or the person next to you or whomever you're looking towards.
Thanks, Steve. Yeah, I certainly agree. It's interesting times. And, here in the blockchain space, there's, massively intelligent human beings innovating right now and trying to come together to solve really big problems. So I can't talk a lot about it on air, but it's super exciting. So all of those things that Steve just said, I do feel like the blockchain industry certainly embodies those. Okay, so we're getting a little close on time here. I'd like to turn it over for last thoughts. So any of you on the call, if you'd like to jump in and contribute, just kind of give your final thoughts for this week, and then we will wrap up.
I think I want to end on a different note than we usually do, which is, this is obviously a market call. We're analyzing the markets, blah, blah, blah. And I know Steve mentioned this, and we didn't really get into the nitty gritty of it. But I just wanted to ask, how's everybody doing, right? Everybody has their own reality. We're experiencing something different. Some have kids, some don't. Some are experiencing different challenges. But, just I don't know, just making this a more human experience and conversation in terms of like, how's everybody actually coping with this individually? What struggles are you facing? And how can we kind of help each other get through some of this stuff outside of just looking at the financial forecasting?
Well, I'll go first on that one, Jeremy. I know yesterday Steve asked us a question, if I was to give you, 100,000 BTC, but you never get to speak to a human ever again. And that's just a really extreme version of being in solitary confinement, which is essentially what this feels like right now. And I immediately said, no, there's no amount of money in the world that, would pivot me from being like a gregarious social creature. I think that's taking a toll on all of us. So that's at least my answer. Some people might happily take all that money and turn their back on society.
Here, I'll touch on that, and just so everyone can do the math on that, that would be 9,300 times 1,000. So that's $9.3 million. And my question I would pose to the world or anyone listening is, somebody goes, I'll give you 1,000 BTC, but the caveat is, you can order whatever you want. You can order that Lambo or that Wen Moon or whatever, the gold bar. You can order all the $100 bills you want, but you can't see your family. You can't see your friends. You can't leave your house. You can order whatever you want from Amazon. You can order all the pay-per-views, have 50 internet routers, be the best miner. You can even be a better miner than Dustin Minch. You can be a better market analyst than Steve Quan. But you can't have any human interaction. And I say, well, what does it really mean? I mean, if you can't take it with you, you'd have all these memories, but what really are memories? Memories are things you can share with others. And I guess that's what I've learned is important, or more important than before, where it's like, the cheesy saying, you can't really take it with you. So if you don't have you can't share any of this knowledge or any, I couldn't be on here. I couldn't share any of this with any of you. And Kristina couldn't, or whomever. And it's like, it just makes you think. I pass the mic back to Kristina.
Yeah, no, I agree. I think a lot of this has really shed light on what's important in life. And I think we've said this, for a few months now, this is fundamentally going to change the way in which we interact with human beings, the way in which we live. Yeah, the interaction might not be the same in the sense that we might be wearing masks hugging each other, but it's fundamentally going to change. I'm an animal lover as well. I don't know if others are, but as an animal lover, just like other things hit you that otherwise wouldn't have. And I saw this post on LinkedIn that hit home, which was, you take your kid to a zoo, you're excited, you see the animals, but you don't really think about the animals. But in this circumstance, we're being told and forced to lock down and sit in our homes. And I saw this visual that basically said, this is basically their reality. And it showed, a giant brown bear, it showed an elephant, it showed a lion, all chained at a zoo. And they're literally sitting there and they can't leave, meaning they've been quarantined and then locked down the entire time of their existence, typically, a lot of these. And it just kind of hit me in a way that it would have never otherwise hit me unless I was in the situation to where I literally can't do much and I can't leave and I can't have the same interactions and communication with others. And anyway, I know that's a little deep, but at the same time, it was just, it's fundamentally, I'm seeing it change my brain chemistry and the way I'm looking at things in real time. So I don't know if anybody also wants to share. I'd be interested if anybody else like Tim Bogert or anybody else on the team could share, because I know they have their own experiences too.
Thanks, Jeremy. Yeah, Tim Bogert here. You know, a lot of what I'm seeing because of people in my life and my relationships who are of special needs, I have a real concern for how, or how society is actually paying attention to those who are in most need. You know, there's been reports throughout New Jersey and the New York area where group homes and things of that nature were basically ignored in a similar way to the way retirement homes were overlooked in this pandemic. And you know, I've seen some good things going on with some attention being paid to these folks who cannot fend for themselves. And you know, it goes back to what you would normally not think of, right? You know, there's some challenges out there, and so some that are just so much greater than ours, and they need to be paid attention to, and they need to make sure that they're okay too. You know, the elderly and the special needs folks that are out there struggling as well as everybody else. So, you know, different perspective. You wouldn't think of it normally, but they're there and they're having to deal with these crushing problems as well. And it's food for thought. I've been looking into ways that I can help participate in getting PPEs and things of that nature for some group homes that are in my area. These are people who have emotional needs, or there are other special needs that require them to be there. And so, you know, it's like I said, it's looking at things a little bit differently, a little bit outside the box, things I wouldn't normally think about, and finding ways that maybe I can help.
I would agree. It's a really good time to be getting involved in your community right now. I'm doing outreach with you know, homeless and trying to help folks who can't leave their homes be able to at least get food and basic necessities, which is you know, it's a time to collaborate with your community and get to know your neighbors, and you know, kind of tide rises all boats situation, and we need to help the folks that you know, are disadvantaged essentially. Okay, so I'm going to turn it back over to Jeremy Bourne. Anyone else want to add some final thoughts here, and then we will wrap up for today.
Okay, I guess it's on me to close this out. So thanks everybody for joining. Really interesting time. I'm excited because I love not knowing what's going to happen and trying to use my intellect and data to prove theories and make hypotheses. You know, I'm being a lot tighter. Making smaller bets, having tight stops and things in place, so in case I'm wrong. But ultimately, it's an incredible time to be alive. There's so many things going on, and some of the things that we talked about on this call, it's cool to see humankind being forced to evolve. And I think that's really amazing to be alive during this time, because we're going to be talking about this with our kids. Our kids' kids are going to be learning about this in their history books when we were all locked down. So with that said, I also think there's a tremendous amount of opportunity. Dustin hit on a few in terms of Handshake and some of these other obscure coins. We're seeing coins moon right now. We're seeing the hexes, the hives. We're seeing some of these that, I mean, Digibyte, like those three alone. If you had invested, you know, 3 months ago, as an example, I mean, you would be doing really well. Let's put it that way. You know, some of them are over 1,000%. So those exist out there today. And it's just really interesting to dive into those and maybe throw a few darts out there at $100 each, $50 each, whatever you have to spare, because, you know, some of them are sub 1 cent. And if you're right on one of them, you know, it could literally change your life. So it's kind of like for me going to Vegas and, you know, playing roulette and just putting a bunch of, you know, markers on a bunch of different numbers. And if one of them hits, great. If not, just make sure that you're not gambling anything that you can't afford to lose. And that's the most important thing. Do your own route. But, we're excited to be a part of this process with all of you. So that's my closing statement.
Awesome. Well, with that, we are going to wrap it up. Thank you for joining us here at Genius Wednesdays, brought to you by the team at Coin Genius. Thanks, everyone.